All right. As you know, every week on Fridays, we do our Friday financial news wrap up with Mr. Michael Zuber. How are you, Michael?
I'm doing well. How are you?
Doing really well. So Michael did you have a great vacation?
I did. Yeah, we got away, Monday through Friday. We still had some content to share with folks, but yeah, I did my daily financial news and then nothing else. So it was good.
I love it. I love when you were on the patio with the snow behind you, and that was awesome. So today is actually Sunday, but we're recording obviously our weekly summary, and we're going to get right into it. Michael, talk about what happened past week in the stock market.
So Thursday and Friday were interesting, right? So Thursday, the market opens up celebrating basically Tesla's amazing earnings Wednesday. Then Jerome Powell gets out and basically tells the stock market, folks, you are not listening. We are going to raise rates. It is going to be faster than you expect. Wake the hell up. At which point they did. So Thursday rolled over. Friday, nearly 1,000 points on the Dow. So hopefully what I've termed the dumb money is waking up. The smart money has been telling us for weeks now, the Fed is serious. So there are probably some more pain ahead. S&P is still at 22 times earnings. Earnings are likely going to be slashed, multiple compressed. So the stock market has some more pain ahead. If you are in markets where you and I live, that might impact real estate. But you got to realize in general, there's this thing called the wealth effect. When the stock market is up, people feel wealthy and spend. When the stock market goes down, enters bear market, 20% or more, people don't spend as much. These are all things we have to watch. It's this whole economy, this whole soup that is working together to have a real estate slowdown that I've been calling, and now we are seeing up close and personal. So we got to watch the stock market. Even though I'm not in the stock market, it is something I watch because it does impact consumers for what I call the wealth effect. So very important to watch. We may have some more pain ahead.
Very interesting times for sure. So let's talk about the Fed for a moment. Now, I know that the Fed did not meet in April. They are going to meet the first part of May, and we're expecting a significant bump in the Fed rate. Talk about what's going on with the Fed this last week and your thoughts there.
Yeah, so the Fed has now entered their quiet period. They do not speak or be interviewed a week before their meeting, which occurs next week on May 4th. And I warned people last weekend, pay attention. Powell speaks on Thursday, and it's his last talk before the meeting. I said that I expect him to, be forceful. Because again, I think Powell is trying to talk down the stock market. I think Powell believes the stock market is overvalued, and he's trying to talk it down. And on Thursday, as I said in the opening, he basically said, wake the hell up. So we're going to have a double raise. Usually the Fed does quarters. They're going to do a half. The good news, if you're following my channel for any length of time, you knew this was coming. I also believe in the Fed minutes. And after they release on the 4th, they will say things like more is coming. I believe, and have been calling for weeks now, 250 basis. So May 4th and June 14th. They do meet again in July, which maybe another 50, but I'm not calling that yet. The Fed is going to get back to neutral this year. The Fed's neutral is a moving target. The low end is about 2.25. The high end is 3. So if you split the difference and call it 2.5, it means we have to raise 9 times. So that means we have several double raises. We even have some people like Bullard calling for a triple raise, which would be a 75 basis point hike. It's not going to happen in June. It could happen in July. But we've got to get back to 2.5. If you look at my channel, I have a playlist called Whiteboard. Weeks ago, I did a whiteboard about 2022 and 2023. I think they get to 3% and then ultimately 4% next year. So yeah, we have a lot more tightening. I think the bond market, which is the smart money, knows it's coming. The bond market, you look at the 5-year treasury is above 3%, right? This is amazing stuff. The 10-year is almost there, right? The reason that's important is there was this thing called the TINA trade, no other alternative, something like that. And, there is no alternative. That's what it is, TINA. There is no alternative. When risk is at 0, you buy stocks. Guess what? Risk is not 0 anymore. It's now 3%. You're going to see insurance companies and other investors buy treasuries. Why buy stocks that are risky when you can get 3%? So Yeah, the Fed is being serious. The Fed doesn't want to play around. The Fed won't say it, but I think the Fed wants to see the stock market fall.
Very interesting times. Very interesting times. Let's talk about banks, and maybe even to not just banks, but how it relates to the consumer, a home buyer, an investor, a one rental at a time investor. What happened this last week with banks, and your take on that?
Yeah, so banks kicked off earnings. They always do, right? The first one's a report. I told my channel before the banks report that I expected one of the big fives to warn about mortgages. Eventually, all of them are, but I believed one of them was going to be first. And sure enough, Wells Fargo. Wells Fargo said we had a 33% decline in mortgage applications. That's earth-shattering. Folks, that was a 33% decline on Q1 before rates exploded another 110 basis points. All the banks are going to be in trouble in Q2. Mortgages are going down. We originated $4.6 trillion in 21. We'll be lucky to do 2.7, 2.8, 2.9 trillion. A lot of that is refis gone. A lot of purchases gone. We have price destruction going on. Yeah. So rates are expensive, right? Rates for the best qualified are 5.5 now. Investor loans are 6.5. I heard some investors getting quoted 7. So we have to change our pricing. We have to do our math. We have to buy better deals. The whole real estate market is going to slow down, right? I call it supply destruction, demand destruction. It is a powerful combination. We did 6.9 million transactions in 2021, existing and new homes. We might be lucky to do 5.2 this year. So very different market.
Very different market. Very different market. So talk about Fannie Mae, one of my favorites, Fannie Mae. What's going on with Fannie Mae this last week?
So I think somebody at Fannie Mae is watching my channel. It's scary. They were using seemingly my numbers. So I did this whiteboard presentation 2022, 2023, like a month ago. Fannie Mae yesterday, and his name's Doug Duncan, I believe. He's the chief economist at Fannie Mae. Yep. Basically reiterated every metric I had, where rates are going, where inventory is going, where we're going to have slowdown, but not price destruction. Basically, Fannie Mae is saying real estate's going to slow down. Transactions down, prices flat, mortgages down, building down. Housing is going to slow down. Again, folks, the Fed broke housing. They kept rates too low for too long. The real estate market is broken. The banks and lenders broke housing in the Great Recession, bad loans to people that didn't qualify. Now they kept rates low for too long, and people aren't going to sell, man. You're going to have a lot of people that go, hey, you know what? I'll just stay where I'm at. You know, I don't need to move, and I'm not going to. So it's crazy.
And I think too, let's finish on that. And I would just follow-up question. You know, we've been talking about real estate market, not a crash, not a bubble, but a slowdown.
Yeah.
And so I feel like we've been talking about that for at least the last 9, 12 months.
Sure.
During COVID and coming out of COVID. What can the viewer, the audience, the listener of One Rental at a Time can anticipate, or maybe even think about opportunities, how to position themselves for what's to come over the next 3, 6, 9 months?
Yeah. So this is definitely investor oriented, right? If you're an owner occ, you're trying to buy your dream home or your first home, different criteria. But for the investors, the One Rental at a Time crowd, do what I'm doing. I have a buy box. I'm adjusting my cost of money because I don't really care what the cost of money is. It just impacts my price, right? So I can offer less. So what I'm doing is doing the diligence, doing the work. I'm adjusting my cost of capital. And I look forward to writing lots of offers this year because I do not need a 20% stock market crash to be profitable. I just don't. And I don't see it coming. But if I put enough fishing lines in the water, I will eventually find that seller. It's like, I'm done. I'm going to Texas. I'm going to Florida. I got divorced, whatever the reason. I don't need every house to take a 20% haircut. I need one house to take a haircut. So I look forward to buying 3 to 4 great rental properties this year. And I will probably have to write somewhere between 40 and 80 offers to do it. But I have every confidence. And I will buy residential properties this year. I think the commercial market, apartment market is broken. I think they will be in a world of pain. but that's probably 2 or 3 years out. So I'm going to buy residential 4s and unders, as many as I can this year. It should be fun.
Got it. So right now, still single family, best asset class.
To me, yeah. Absolutely.
And obviously you're a big holder of apartments.
I do have some, yeah.
And you obviously at this time, affordability and such, you think the single family asset is still the best asset for.
Yeah. And again, I want people to hear me. This is what I'm doing. It's not easy, but it should be 10 times easier than last year. Last year, I could write 1,000 offers. I wouldn't even get a counter because the market was so hot. Now I write 80 offers. I expect to get 15 to 20 counters, which might lead to 3 deals. I'm going to fish for the motivated seller. I don't need every deal to take 20% off. I just need 1 or 2 deals, and I will do the work just like I do every year.
I love it. Folks, you heard it here today. Thank you, Michael, for all the work you put in, all the research, everything that you do. Again, folks, the books. We talk about the books one rental at a time. Conversations with Real Estate Millionaires. You can find them on Amazon. If you have the books, if you enjoy the channel, please go to Amazon. Give this man a 5-star review. Michael, thanks for all that you do. Have a great Sunday afternoon. Go Warriors.
Go Warriors. Yeah. Sweep.
Take care.